Hi, and welcome to the Options Doctor Stock Options Trading course. In this section, we'll be covering price, time, and direction. Also, please consider subscribing to the Options Doctor on YouTube at the Options Doctor. Also, be sure to follow us on Facebook and Instagram for unique content and updates at the Options Doctor. How options really work. An at the money or ATM option means that the option strike price and the stock's price are equal. An in the money or ITM option means that a profit exists due to the option strike price being more favorable to the stock's price. Conversely, an out of the money or OTM option means that no profit exists when comparing the option strike price to the stock's price. Price. There are variants to price depending on how you plan on investing in options, but the idea is the more in the money you are, the more expensive the option contract will be, and the further out of the money you are, the cheaper the contract will be. These both come with risks. The in the money being larger amounts of capital required, which could be lost if the price reverses on the stock. The latter being that if it never gets close to being at the money or in the money, the value could remain unchanged and or the price of the stock could reverse, thus losing value. With all things in life, the bigger the risk, the bigger the reward. And this is a strategy we employ to make massive gains on out of the money stock options. If a stock begins out of the money and ends up in the money, you can pay a fractional amount of what you could expect in return. This could be tens or hundreds of dollars that ultimately can produce gains in the thousands or tens of thousands, as we've done many times over. Time. With time, there are benefits and risks just like with price. The main being the more time you desire, the more expensive the option contract will be. And the less time you desire, the cheaper the contract will be. But you also have less time for the price to move in your favor. You are simply buying yourself time to be right about the move of the stock's price. The quicker it moves in your favor, the bigger the return will be. On the other hand, the longer it takes to move in your favor, the more value the contract loses, so the more fundamental or technical data and support you have for your option selection, the better. Direction. Direction is possibly the most important, considering you have to have an idea as to the direction to select your strategy, a call or a put. The risk here is pretty point blank. You can misjudge or simply choose the wrong direction of the stock's price movement. But on the contrary, if you're correct about the direction of the stock's price movement, the gain can literally be unlimited. In most cases, the direction of the stock is the single most important factor to drive the price of your option contract into profitability. However, when you properly tie in the other two factors, time and price, this is ultimately how you succeed in options trading.